How's it going, everyone? Back with another Kaspa update. Now, if you remember from, I think it was Friday, we were talking about this move as we confirm this final support layer as support. We are expecting a bounce, and this bounce must actually reclaim the moving averages. Although since that video, we have not yet reclaimed the moving averages, I'm seeing some positive things. So we're going to run through all of this in today's update. I'm also going to talk about a potential bearish scenario if we now get rejected here and lose this support. You can clearly see where the move would lead to, but we'll run through this in a bit more detail. Make sure you like, subscribe, comment, and share. We're so very close to 8K subscribers. I think that we can hit that over the next couple of weeks. So thank you for the continued support on the channel. I'm also giving away one free 30-minute one-to-one mentorship with myself and a free ebook to 2 lucky winners. All you need to do is follow me on Twitter and YouTube, like the giveaway post, which is pinned to the top, and of course, comment done when you have done that. So the links to that Twitter post is in the description of this video update. Let's continue with where Kaspa is heading to next and what that positive thing that I'm seeing at the moment, although we haven't broken the moving averages. Although we haven't broken the moving averages, which is what we truly need to see to invalidate any further downside, because as of now we do have a bearish cross, and essentially this bearish cross appeared on the move down. Then we found a key level of support, and we're essentially trying to confirm this as resistance for continuation lower, with the 200 EMA holding the uptrend up and would actually be your target to the downside. Equally, for a downtrend to form, we would say you need to lose the 200 EMA. That is why we're saying holding above the 200 EMA keeps the uptrend. But in this very specific scenario, we were given a huge wick on the KuCoin exchange. The Kaspa Tether KuCoin chart gave us this wick down at 7.5 cents. So in fact, even if you do lose the 200 EMA, it's not like a final nail in the coffin to say it is a downtrend. We would actually have to lose that low as well. So that's very positive that the 200 EMA, we are allowed to lose it as long as 7.5 cents holds. So I'm not anticipating it to be lost. If anything changes, I'll be the first to let you guys know. But the reason why I wanted to talk about something positive out of today, even though we haven't really broken out yet, is that we're actually flipping this previous support over here back into a support. As we approached it, and when I made the video on Friday, I think we were just around the moving averages, and then we can see for the daily candle close, it was back above the support, but not through it completely, where we want to see something like this actually happening. It is fine that we're finding support on the 1414, but let's also find support on the 1272 just to confirm this move back up to 11.5 cents, and on the break of 11.5 cents, the move up to 13 cents. And we know, if you've been following these updates, that in order to reach 25 cents, we must reclaim the 0.5 Fibonacci at 13 cents. So keep that in mind, that we will not get this broken high unless we push through and confirm the 0.5 Fibonacci, which is 13 cents, where we're previously finding resistance but now as support. So guys, I'm liking the first step over here, but there of course still is the risk of continuing lower, because we need to push through the moving averages. And that's why, although we've run into the 1272, rejected it, and fallen back to the 1414, confirming it as support, it's now the time to break through the 1272 at 10.7 cents. Confirm that, and then we're on our journey back up to 11.5, and then of course 13. We can see that this is previous resistance over here, and it was support. So that's why it's the level that we need to reclaim. Equally, if we get a move back up to the 0.5, can you guys see the bullish pattern already starting to form? It's a huge double bottom pattern, so I'm going to be accumulating. I have been accumulating anyway. I've been DCAing throughout this whole range over here, and also equally, if we do actually get that move further down, if we fail to break through the 1272 and actually confirm, well, as resistance, so now we're giving the opportunity to break through. If we start to see more wick rejections just like this to the upside, then we're going to attack the 1414 again. On the loss of 10.3 cents, it's back down to the final support. You can still get the opportunity to reclaim and flip bullish, but of course it's like a higher probability chance if we've seen a bearish cross and we're using it as resistance and then putting in this new low below the final support. We're coming to the 200 EMA, and I would use that as an optimal entry point on Kaspa, simply because if the 200 EMA holds up, we know that the uptrend continues, and that means a break of this high eventually. So that's why it's going to be your optimal entry point, because it's going to be on the lowest point of the uptrend, your higher low essentially. But you don't need to come down there. We're just trying to find bullish patterns at certain key levels before the 200 EMA. It could be at it, it could be before it. And what I'm seeing right now is it's actually appearing before the 200 EMA. We're on this previous resistance, hovering above it as support. In this range bound market, we actually are creating a huge bullish pattern, this double bottom, and that is exactly how we get to 25 cent. Guys, make sure you like, subscribe, comment, and share so we can hit 8K. The quicker we do so, the quicker one of you or two of you will either win one ebook or one or a 30-minute one-to-one mentorship with myself. Guys, you can join the Discord anyway, you can get the ebook anyway, you can get the mentorship anyway. There are multiple discounts at the moment on the website. Use the links down below where you'll find all the discounts over there. Cheers everyone.